Hello. In this video, I'm going to ramble. I believe it's my 5th ramble, and I'm going to talk about a few things I think are going to occur within the market. I'm not going to call this a forecast or a prediction because I've said before, I don't believe that either are appropriate, as the market really doesn't care what I have to say. Before I get into that, though, let's start with talking about Range Hunter itself. It has proven fairly stable and fairly resilient, so it will be on its way into the mainline very shortly. Price action analysis at the level that it does is usually quite complicated and most often very wrong. But so far it seems to be doing a fairly good job in maintaining a very stable analysis level. And it's going to be part of what I use today to talk about what I think is going to happen with Bitcoin. I know a lot of people are expecting Bitcoin to go into the next bull rally or bull run. As you can see from the chart using Range Hunter, it has passed its resistance level into an upward climb. But I don't believe this is going to be a long-term push. I think there are too many elements that suggest the correction is not yet over. While the market has returned to a healthy state for the last couple of months, realistically, I don't think the bears are finished punishing the bulls for the year-long run we just had that pushed Bitcoin to all-time highs within the 60,000s. If we move to the daily chart, you can see it more dramatically. In terms of the level of acceleration that the price action has taken versus the correction. If you go with just the very basic correlations between the bulls and the bears, it's very easy to see an equal and opposite push to drive the price action back down to roughly last year's level, which could be just below 20,000. Some even suggest it might get pushed to last year's median level, which would be around 12,000. I don't know if that's a good analysis or not, or if using only an Elliott wave to derive that is enough evidence to support that claim. But I do believe that the market does show consistent behavior that the correction is not over, and any short-term rally is going to be short-lived. I think that is the biggest point and consideration that really needs to be examined. I don't see a legitimate shift in direction enough to warrant this type of possibility. Here I'm using Range Hunter, but if you look at the momentum of the price action, even though it's slowing, it does not look like it's really getting ready to turn around in a meaningful way. Let's bring up the 6-way momentum. And looking at it here, this is the 7-minute, which is giving mixed signals. But let's go to the daily. You can see it's still dropping pretty aggressively. And if you go to the 4-hour, while it is slowing down, and you do see a turnaround in the momentum, I don't know if that's going to be enough. And it is possible it might want to retest the 34 to 36,000 range, or even a 38,000 range. But overall, I don't see it pushing the price back up into the 50s and 60s at this point. That could, of course, change. But the questionability of how healthy the market is going to be is a different question. As you see with May, there was a slight rally that lasted until May 10th or so, and then another huge correction. So realistically, I think it's best to prepare for more corrections and to look at the possibility that we're not done yet. Because I really don't see us being done. I believe the market is going to continue and progress. But I do believe that there are plenty of short-run opportunities to capitalize on. As you can see here, from the 30 to 40,000 range would have made a good profit. Also, I believe that more aggressive approaches can be profitable as well. But they do need to be carefully analyzed and scrutinized. Here is a very basic, very simple organic process running on a 7-minute chart that is pulling a 1.6% profit with a maximum exposure of about $100 using a base position of $11. Now it does have a few exit points along the way, and that is to be expected. But as you can see from the market in general, it's pretty healthy and pretty consistent. So short-term profits are definitely still worth going after. I don't know that I would want to take on too much accumulation though, with the way the market is and just how unstable it is. I do believe some accumulations and status do need to really be taken seriously and limited. And not all coins are going to perform equal. So you do want to be careful with your analysis and pick the right coins. I personally believe trading Bitcoin directly may not be the right season for it. But trading the altcoins, as you just saw with BAT, looked more profitable and more reasonable. Whether or not my speculations pan out, only time will tell. And it will probably end up in the dumpster with every other forecast on the market in terms of whether or not what Bitcoin is going to do. But that is exactly why I don't make forecasts, because I know they're usually wrong. Either rate, I do recommend very careful analysis and proper trading. We are in a state where between legal jurisdictions of the European Union and the United States, we are looking at some of the most heavy-handed legislation to ever be passed. And I do think that will have an impact on the markets. When that legislation is passed, it's going to be questionable. But nonetheless, even the mere fact that legislatures are talking about aggressively legislating the markets has had an impact in and of itself. And that is an important factor to realize and understand. It is important to pay attention to these details before you get into the market. But if you do get into the market, having a careful process that can determine exactly what your profitabilities are is very important. In this case, this is showing a 4% profit for a longer duration of 4 hours. That's a very generous profit considering how messed up the market is. If you go with shorter term recipes, you will see differences within those profitable margins, but still well within acceptable limits for proper risk mitigation and careful trading approaches. Trade safe, do your analysis carefully, and watch the market news. I'm generally not one for getting out of the market completely, but I do believe it's definitely worth reconsidering some of the more aggressive approaches and maybe even slowing them down or picking up a few more defensive approaches just to balance out your portfolio. Until next time.